what should be the strategy amidst this market movement? Let's try to decode that with Rohit Srivastava, who is joining us on the show right now. Hi Rohit, good afternoon. Good to be speaking with you. And first up, take the congratulations for your accurate market outlook, because the last time we connected, I remember it was the metal pack that you highlighted is going to shine the most. And look at the moves in some of these stocks like Tata Steel, JSW Steel, as well as SAIL. But Rohit, let's start with what's your current outlook on the metal pack?
Thanks, Shrishti, for the shout out. And yes, it does look like the metal pack will continue to do well, because we have a macro environment of a weak dollar that generally benefits, commodity prices. So that is the simple approach of it. The other is that what we could see last time was the outperformance of metals. Even when the market was falling, you're really not seeing big declines in these stocks. And so moment the market has picked up, we're actually seeing them outperform. So I think that trend will continue. It's not something that's going to end easy, though today what you see is more steel stocks doing well. The others, which are the copper, aluminium stocks, are actually taking a slight back foot. But it is pretty much a broad-based metal rally that we are beginning to witness.
Hi Rohit, this is also Ankita joining in. Good afternoon to you. Another good day on the markets. Rohit, in fact, yesterday we broke above the 20 DMA as far as the Nifty is concerned, and we are inching up, testing those 50 DMA levels as far as Nifty is concerned. We could scale 23,000 in the near term. What is your outlook for that? And what are the levels that you are watching out for? Also in the Nifty Bank, that is managing, to continue its outperformance. Is that going to really lead the rally now going ahead?
So Bank Nifty, by not falling much, did indicate its own internal strength. So when the Nifty was making new lows, Bank Nifty did not break the low that it made on 27th of January on a closing basis, and that sort of made it convert into something what we call as a double bottom out there. So definitely financials have been in focus. And within financials, what I've been saying is the NBFCs, right? The NBFCs have actually outperformed within that pack. So I would specifically focus on that lot for better market performance. Not to say that the other financials won't pick up. I mean, we've seen a rally in ICICI and Axis in the last few days. But my focus is really on the NBFC segment of the financials where the specific performance is happening. So yeah, that's where we are on the Bank Nifty. I think it should eventually get past the Feb high, which is at 50,640. Nifty will have a meaningful breakout when it gets past 23,050, because that's the trend line from the top that we made in October to the top that we made in December. And when we draw that closer to 23,050, I think that's going to be the next test.
All right, I guess we have snapped. All right, Rohit, if we have you back, please continue and help us with your take on the Nifty. You were just highlighting that 23,000 could be the next test for Nifty 50. And if that crosses that pass, then it will lead the move from there on. Rohit?
I hope you have not lost me.
No, you're still with us. But Rohit, you were just talking about the Nifty. But Rohit, I also wanted to understand that apart from metals and financials, any other pocket that is looking interesting to you right now?
So I think oil marketing companies are a specific spot, and you were also mentioning them some time back. You have a good mix of things there because of falling oil prices and the strategy of the US to continue to pump oil, which is going to keep oil prices down. It's currently in the 60s. We can't rule out that at some point of time you will break $61, which it has held multiple times in the last 6 months. And if it does that, then you might even end up at 50, 55 or $50, somewhere in that range. So the low oil prices are acting as a fillip, because our retail prices for oil have really not changed, and that means the margins continue to expand. So I think OMCs, which have seen a pretty decent correction, if you look at the last 4-5 months sell-off, you're at a good point where they're oversold. They're beginning to pick up momentum both on the daily and weekly charts. We can see, the RMI momentum indicator that we use giving a positive signal. And so I think we would, expect outperformance of OMCs.
All right, Rohit, thank you so much for joining us and taking the time out. We will have to let you go on that note. But
if you like this video, then like, share and subscribe to ET Now.